Welcome to Markets Now. I'm Michelle Rook along with Roose of U.S. Commodities. Well, livestock futures leaning mostly lower today with the grain trade a little bit more mixed. And Don, let's start off talking about the soybean market. We did see a little bit of a bounce today. Was that just some short covering in that market? And were you disappointed we couldn't close back above that 100-day moving average?
No, I think it was really respect for the time of year it is. When seasonally we have a chance to bottom here around this time frame into next week. So I think it's that. I think it's the fact that we went down earlier in the week and tested the lows that we had in the summer months. That 1282.5 area went to 1284.5. So I think it was a challenge of that. Found that we held there and try to push back over 13. And then I also think it's respect for the stocks and all positions report on Friday, Michelle. We've had surprises there. They're going to, if they're going to adjust last year's soybean crop, this is usually the one where they will do it. And so you could get a surprise there, but you never know.
Yeah. Same holds true for the corn market here. Today was some of this end of month, end of quarter, maybe positioning before that report as well.
Yeah, I think so. I think when the funds are sitting here, actually a negative position, a short position, if you will, at a 3-year high. The last time they were this short was really back in August of 2020, so a long time ago. And, you get in this the price level where the producer's not selling, a little bit of respect for the end of the month, end of the quarter trade, and then the stocks and all positions report. So I think it's just a combination of everything. Still hearing yields variable, but I think it was a wake-up signal on the demand side when Mexico was a big buyer of corn earlier in the week and, did give us some real stability.
Absolutely. They found value there at that price level, at least. As far as the stocks report, we have had quarterly stocks reports for corn that have been big market movers. Is that possible again here on Friday?
Well, it most definitely is, and it's the feed residual, what's the demand on the corn? That's probably the one real issue. We've had misses as much in recent time as up to 400 million bushels. So put that one down as a question mark. And soybeans, they could adjust the acres or the yield and production from last year. They've done it before in the September 30th report. So there could be some surprises, I think, at least enough to warrant a concern and at least some profit taking, Michelle.
Yeah. So you mentioned the reversal in corn. We talked about the market bouncing off those August lows in the soybeans. Is it too early to say that we're putting in harvest lows there, Don, or not?
Well, it's work in progress. I think if the right things happen, we've already socked in a harvest low on the corn. Of course, you're going to need the demand to pick up. You're going to need to be the yield not get bigger, get smaller, and you're going to need the producer not to be a seller, which it doesn't look like it. So it feels like it. You have to respect that key reversal this time of year. And actually, in the last 10 years, about 90% of the time, Michelle, we bottomed between August and the middle of September. So you're in that window.
And what about the yield component? Do you think the corn and soybean crops are getting smaller or not?
Well, I think the biggest concern is on the soybeans because we got hit with that heat late, which was a concern. And the good to excellent ratings on soybeans are sitting 5% under a year ago. A year ago, we had 49.5 bushel an acre yield, and the government's at 50.1. So realistically, could you be under 49 bushels per acre? It's not a stretch to believe that. The corn, we'll see. It's probably going to be in the test weight, and these kernels takes a lot of kernels in some dry areas to make a bushel. So it's still work in progress. Early on harvest. So far, it's probably a little better in some areas than we thought and worse in the areas that are bad. So kind of a combination so far. Too early to tell. Next week, we'll get a whole lot better read.
Yeah, a lot of variability, though, to your point. Okay, this wheat market mixed yesterday, kind of mixed today. There's been some intermarket spread activity going on. But is that market also squaring up against reports on Friday or end of month and end of quarter?
Yeah, I think most definitely the wheat market's doing much the same as corn. Remember, we put in a key reversal on the charts on wheat, September 12th crop report day. We haven't been able to take that out again. That's a positive. We're also more competitive in the world at these price levels. We got issues with the Black Sea still going on. And we have both two big countries, Australia in a El Nino drought. We have Argentina in a drought on the wheat. So both of those are a concern. Stocks at the exporter level sitting here pretty tight. And so, yeah, it feels like you're trying to base down here too. Very much like the corn, Michelle, we need some kind of a catalyst to get us moving to the upside. But the charts are right. The funds are short in both corn and wheat. So let's see if we get a catalyst.
Yeah, I was wondering about, as short as the funds are in the wheat market, if we maybe get a little bit of a short covering rally here into the quarter. The other thing, the small grain summary, you said a lot of people don't necessarily watch that, but if we get some changes, would it most likely be in spring wheat, do you think, with the yields going up, or what?
Yeah, I think that's the concern is, the spring wheat, we get the pretty good growing conditions, for the most part, with the good to excellent ratings the way they are. So that one is one that could go up a bit. The oats is another one to watch. The oats market, it's kind of sitting here chart wise as some support. Could we get some surprises on the oats and more on the positive side? We'll see.
Yeah. So cattle market, what do you think there? We had a down day today. Was that just risk off selling pressure because of what was going on in the outside and equity markets?
Well, we've talked so long about the supply side of the market, which is obviously cyclically bullish, well documented, but there's the other half of the coin, other side of the coin, and that's the demand side. And I think when you have the equities under a lot of pressure, interest rates on the rise, premiums in the market on cattle, funds sitting here record long, I think that the charts broke down. We'll see what we can do to the downside, Michelle, see if we can take some of the premium out of the market. I think it's buyers beware. Technically, fundamentals are still positive. They're probably going to stay positive for a couple, 3 years. It's not that, it's the demand side.
Yeah. And, when we get these, I guess, economic concerns that come into the market, that is where you get the sell pressure from. But the funds, they've been defending their longs. Are you concerned that is there some chart points that they're watching that we could blow through, that we could roll this thing over and the funds could take an exit at that market?
Well, on our technical stuff, we've already started to break down. We're getting into some sell signals, pressuring it to the downside. So, and we're not really that oversold here. So, that's the risk, Michelle. And we'll see. The government, remember, for all of next year, you don't have to hang your hat on that, but they've got the average cash price for all next year, 186. So that certainly doesn't work for if we get that for an average with the price of these feeder cattle prices out here currently.
Yeah. Let's move over and talk about hogs, because last week we went up and tested the upper end of the trading range, then tested the lower end of the trading range. And where are we going now? Because we're moving into the hogs and pigs report. And so is that what the market is taking as cue from or waiting for?
Yeah, I think we only get 4 reports there a year, so most definitely give us a signal. We know we've had a lot of liquidation of the breeding herd. We know that, from the vertical integrators and on down to the medium and small size. So look for the breeding herd number to come down in this report. Also, probably the pig crop smaller. So those are a couple things. Liquidation is still going on, and short term, we have the futures running a discount to the cash market, anticipating a seasonal break. But the liquidation actually, it points positive for 2024, Michelle. We just have to get there. And with the high price beef, the pork consumption might be something to look at. Remember, the cold storage report has been more positive on pork, down 4 months in a row. The beef cold storage was a little bit large, a little bit on the negative side. So maybe some switches there on the demand side going forward.
And with what you just said about the supply side maybe starting to shrink here with the sow liquidation, do you think that the futures market is too pessimistic in the back months about where the cash price is going to go or where the market's headed?
Well, I think most, probably knowing that where the demand side of the market is with the cattle, the futures market has probably overdone the seasonal break here. In the next year, when you look at it, you've got summer months hogs moving into the mid 90s. So it tells you it wants to see if we can move over 100 back there, respectful of the numbers not being there on Thursday.
Okay. Well, we'll wait for that report. Thanks for joining us, Don Roose, U.S. Commodities. That is Markets Now.